Um, Next one. Hamad asks, or Hamad states, hey, I have been trading the 3 minute time frames for quite a while. I'm considering switching to the 10-minute charts next week for the following reasons. He gets caught in the chop. No, he trades inside the river, inside the dragon. So take responsibility that you're making decisions to trade very close to the center line of the dragon, and your stops are so small that you're trading inside. You're choosing to trade inside the dragon on 3 minutes because of fear of missing out. Okay? Uh, 10 minutes charts don't seem as choppy, meaning that the moves are smoother and wider. Yeah, but the time segments are slower, and that's part. So it does have a smoother characteristic. But the stops are going to be wider, and the moves are not going to be as big with respect to the risk. But that may be what you need in order to stop making decisions to trade inside the chop. Higher quality signals on higher time frames, I agree. You can still capture the majority of moves. You can capture major intraday moves. I tend to agree. You want to be a swing trader as your account grows. I especially agree. Could this be a stepping stone? Yes, it could be, and it should be. Yeah, 3 minute charts will burn you out. And you're trading the full session. Is that a best decision on 3 minutes? No. And the 3 minutes feels like a lot of work. Yes, it is, because you have, what is it, 6.5 hours times 23-minute bars. So you have 150 data points to contend with. And that's a decision. That's 150 decision cycles times every symbol. And if you're trading 10 symbols, that's 1,500 decisions. And now the efficiency and the effectiveness and the cost of decision making times 1,500. So if you go to 10-minute, that gets reduced to 120 compared, which is a reduction of 92%. So you're making 92% fewer decisions. That's good for the team. One of the things that you got to decide on would be that if I want to discount the gap in the first, if I use 3-minute bars and I'm using the 10 period dragon, at the 30-minute mark, when the initial volatility of the first 30 minutes is over, I'm using all of today's data in the construction of the dragon and the PSAR flips and all that. So I'm using current data. If you're going to wait 10 minutes and you still want all of today's data, then I got to wait 30 times 10-minute bars. Oh, correction. If I'm doing 1 minute, I get all the information in 30 minutes. And if I'm using 3 minutes, I'm using the last hour of the previous day. If I'm using 10-minute bars, I probably have to wait a little bit longer. You don't have to wait the full 300 minutes, because then you'd be out here before you have enough 10-minute bars to make decisions only on today's date. But recognize that you're going to get a significant change in the construction of the charts, because it's not until after lunch that it's only today's data that's constructing the Z3 lines and all that jazz. So you got to account for that. Still struggling to find the movers. This gives you 3 times as much time to find the movers, or reduce the number of things that you're looking at. Say, I'm only trying to find the movers inside here. And then you got to decide if the target set that I have no movers, then I'm not trading. What you're doing, I think, might be, check yourself, is if I don't find movers in my initial set, I'm looking everywhere and everywhere, scrambling because of a desire to trade, and I'm not prepared on these. And then when the market starts moving, like the market's quiet, so nothing is moving in my data set, so I look elsewhere, and then I start taking positions, and then the market starts moving. Now suddenly everything's moving, and now I get too many movers. So take a look at the number of things that are inside your prep list and make a decision not to trade them if they're not moving. Wait for them to move. Now, the good news is that if you widen your time frame to 10 minutes, you can actually have more symbols prepared. Like I can manage 30 symbols on 30-minute bars, but I can only manage about anymore 3 symbols on 3-minute charts, just because of the cycle time and the cost of making routine decisions. It's a span of control. So you got to contend with that. You still must be concerned about the first and the last 30 minutes of the day. And you're going to still be, I think, restricted to these time windows, the 2 hours in the morning, the reduced volatility of the lunch of about 90 minutes, and then a 2-hour segment in the afternoon. Now, when you look at my way of fractal framing, you notice that I make most of my money on this time frame. And I use that to inform decisions about, am I going to hold it overnight or not? And I'm concerned about, do I hold it overnight, and what's the gap, and how much money have I made on this one to justify taking the extra risk of the gap? I still got to reduce position size, but I also know that's something that I cannot change. Some of these go on to be very good one-day or daily bars swings. Some of those become 3 days. Some of those become 9 days. Also, some of the 9-day setups become 3-day refinements, become 1-day refinements, become 30 minutes. Or more likely, a 9-day chart alert becomes a 3-day tactical, and then I bring that into the 30-minute. And then if it's a sniper trade of the day, it becomes a 3-minute. So I just work on those time frames because there's a factor of 10 between the 3-minute and the 30, and that's a significant enough difference that it's two really distinct populations. There's a bunch of fast, young, aggressive day traders monkeying around in here, and it has volatility characteristics of a certain kind. And then over here, there is slow, fat, dumb swing traders like me who are operating on end of day data. So the 30-minute allows me to steal a march on them, to front run them, because I'm getting a lot more data points. I'm getting 2 data points, or I'm getting 1 data point per 30-minute segment. And now I've seen 10 data points before I make the decision on whether or not to hold it overnight. I have this much information, and I had a chance to make some money in there, and I have time, and I can make better decisions about whether or not to hold it overnight to let it grow to become this. And at night, I can study this and decide if it's a candidate to frame to try to get going early after the opening 30 minutes and make that a 30-minute swing trade where I have about 10 decision points intraday before I have to make an overnight decision. So on the 30-minute, I get about 10 decision points on 30 different symbols, which means 10 decisions on 30 symbols is about 300 decisions, which I can make during the course of the day without burning out. Because it takes me 2 minutes to make 30 decisions for all those symbols, and then I have 28 minutes to chill out and recover and rest and reset and get back to the zero state and make plans and all that other stuff. But my decision cycle is fast because I have a reduced symbol set. I'm looking at standard patterns. It doesn't change that much in a 30-minute bar, and it's pretty clear. So you're going to experience the same thing when you go from the 3-minute to the 10-minute. I don't know if that's enough time difference to make that much difference. I know that for me, the difference between 30-minute and 3 minutes is plenty, that I'm never confused about what I'm doing. I always know what kind of a trader I am when I'm deciding, am I a 3-minute guy or am I a 30-minute guy on this symbol? And then at the end of the day, and I make a decision to hold overnight, I know if I'm a 30-minute trader or a day trader. I know if I'm ready to make that transition, and that's enough change that I can get rid of 80% of the position. So for me, the difference between 3, 30, and daily is plenty. And it's wide enough that there's absolute clarity in my mind about what kind of trader I want to be. Now, you might be able to do the same thing with a 10-minute, a 2-hour, and a daily. Because remember, from the 10-minute to the 2-hour is times 12, and from the 2-hour to the 1 day is times 4. So for me, going from 3 to 30 is times 10, and from 30 to daily is times 10. There's a certain symmetry in there, but this gives you a 10-minute versus a 2-hour is a thing that you already want to be thinking about for holding overnight risk. So yeah, all of these things are true. You have a good plan. I highlight these things to just remind you that the standard day has really 5 different characteristic time frames in which volatility is really different. And the kinds of patterns and decisions you make in each of those time frames is really different. Don't be lulled into thinking that this is just one standard time frame with normal, but no, the morning volatility is different than the lunchtime volatility, which is different than the afternoon volatility, which are all different than the open and closing volatility. So you still got to contend with those, but I think your plan is sound. You got to decide what you were going to do. You made a commitment earlier about a 4-week study. And maybe we just need to stop that one, capture the data from it. The data that you have probably says, I need to make a corrective action now. I don't need the next 2 weeks to make this as a good decision, which I would concur with.